Good evening. This is the video newsletter for BuySellShort.net for Tuesday, May 11th. One monster rally yesterday in the markets. Actually, let me switch to the daily chart. Dow up 400 points yesterday. Of course, unless you were long going into the close on Friday, we had picked up a few plays in anticipation for a bounce. But unless you were really long, you really did not benefit from yesterday's rally. They essentially opened the market up 400 points. So the only people who actually made money were the market makers and specialists. Still very healthy bounce back. And going into the last 90 minutes of the session today, we were up about 86, 90 points. So essentially, we regained all of that robot crash that we had a week ago. Um, of course, going into the close after we got that little pop, we had a sell off. We went red. But you recall the trading alert I sent early this morning saying best scenario for this market right now would be plus or minus 50 points or less. And we came in down 36 points. Very, very nice setup. Uh, Flipping over to the daily chart, here you can see on the daily chart we had that triangle formation, that big breakout, and then since then we've been consolidating over the last day or so. You'll note here on the 15-minute chart, we're likely going to see a golden cross on the 15-minute chart sometime tomorrow. Haven't seen one of these in a while. Typically, it is bullish for the market in the near term. Average gain is about 150 points once we get the cross. Also, just as a point of, in case you don't remember, usually when we see this cross, we see a sell off first. So we could easily see a move down to 10,700, 10,600 on this market and still be fine and dandy. If we flip back to the daily chart, you can see we've got a nice band of support around 10,5 to 10,7. And when we went into that cautious stance a week and a half ago. This is the area we were looking for the market to go on a retrace. It was 10,700 and then 10,541. So just ignoring the robot tank manipulation we saw last week, market is still looking pretty okay. SMH, which is what we really pay attention to, early sell off this morning. Whenever you see the SMH sell off early in the day, pays attention to watch the bounce. You will see the SMH move up and down before the rest of the market, which is the reason we use it as one of our market indicators. SMH started a really, to move or to bounce before the market this morning, and then once it started getting close to pushing green, we really started the market start to take off. So pay attention to the text. They lead down, they lead up. We're right at the upper resistance level of this bullish falling wedge on the SMH. And on the SMH, we've got a pretty good banner of support around 27 to 2750. So we could continue to see up and down motions in the SMH. But, as I mentioned in the chat room, the popper scan going off the chart, have not seen so many stocks pop on the popper scan in a long, long time. And that tends to be a bullish indicator for the next 2 to 3 weeks. Uh, Actually, let's jump into some stock plays and I'll show you what I'm talking about on the chart. As an example, here we have HILL, trading alert yesterday. This is a tech stock that got beat over the head last week. Big, big sell off. Over the last couple of days, it's been consolidating nicely down here. Remember, a lot of traders are still sort of iffy on the market. This is what you'll see as the market consolidates its gains, and this is why we're starting to see so many stocks start to trigger buy signals on the popper scan. Big tanks consolidating in a tight range, and then in the next couple of days or next few days, you'll start seeing stocks with setups like this go boom. Cash rich tech play down big over the last few days. All the indicators nicely oversold. Nice setup here. EGT is another one. Big sell off last week, has been bouncing around here at its 200-day moving average. Thing with EGHT, this is a gem of a tech stock. Cash flow positive, cash rich, profits, no debt. Business continues to grow, just beat over the head by the market. It's peer VG. Let's pull up VG. Vonage has been on a very nice move over the last few days. EGHT, exact same business at Vonage, except they don't have a lot of debt and they don't bleed money like these guys do. So Vonage will likely be the trigger that takes EGHT up. This is the gem of the VOIP sector, in my opinion. Now, biotech stocks, as you recall, we've been waiting for ASCO is in 3 weeks, starts first week of June, and the cancer stocks are already starting to move. PARD, this is a stock that we got a nice little scalp in yesterday in the chat room. $1.13, trading as high as $1.30 plus after hours. Nice little 10% gain. Got a dip on earnings today, and that was the reason we sent out the trading alert to start jumping into this stock around the 116 area. Actually got a nice pop on this one into the close with $1.24. But this is a biotech stock that got hammered over the last couple of months on news that they pulled their cancer drug. Yesterday, the company came out and said, hey, wait a minute. Cancer drug actually looks a lot better than we thought. And we're going to be giving a presentation on it at ASCO. And we're going to be called one of the best of ASCO presentations. So, you don't make a presentation at ASCO and not have good news to report. So this is definitely going to be one of our plays going into ASCO. And as mentioned in the alert, we're going to be accumulating this one on dips. Has rock solid support around the $1.10 area, but this is one half position for now. You can look to have a core position and a scalp position in this one, and target is a move to $1.40 plus. You'll recall the last time we got into this one was in the March cancer conference, and this stock went from $1.57, I believe, to 209. So almost a 30% gain for us in a couple of days. The last time we played that, we're looking for a similar sort of gain here in the near term. BNVI, this is our other little cancer biotech. Had earnings and after hours. No surprises at all in the earnings report, which is fantastic. Again, you're going to start to see bios pick up. This is bio season. Next month is when biotech stocks really start to jam. Beaten down stock. This is when we got a fat gain out of a couple of weeks ago. Has been finding nice support down here around 40 cents. And now that earnings are out of the way, we can look to start building positions up in this one. LGND. Again, another stock, biotech stock, got hammered on last week's sell-off, and you can see here, as I mentioned earlier in the video, big sell-off, nice little consolidation over the last 2 days, and in the near term, we should see this chart go kaboom. RSI deeply oversold, you know the drill. Stochastics triggering a buy signal. Nice oversold sell-off in a sector that we really, really like for this time of the year. ETRM, again, this is another stock. We've played it many, many times over the last year. This is a stock that loves bouncing to the 56 to 60 cent area over the last week after the sell-off of last week in the market. Over the last week since then, we've seen it put in a very nice bottom here around the 42 to 44 cent area. Our bounce target in this one, 56 to 60 cents. Volume dropped precipitously over the last 2 days. Actually, today when we sent out the alert, volume was the lowest we've seen on this one in a long, long time. It only traded 300K, or actually 400K today. Stock to trades, anywhere from 500,000 to million plus shares a day. So volume dropping is usually a sign of a bottom being made. Sellers are washed out, and these are the kind of stocks that go boom, boom, boom for us. RSI oversold. Stochastics oversold. ADX looks good and should be a nice little move here once traders start to jump into the biotechs. And remember, we're starting to see a lot of biotechs pop over the last couple of days. Biotech stocks moving is a sign of speculative money getting back into the market, so that is a good thing. DSCO, this is one we jumped into. I mentioned in the alert this morning for an ad on a thin of 52 cents. Breakout 55 cents, could see a move to 60 to 68 cents up there at the 200-day moving average. RSI breaking 50, positive ADX. Stochastics on a nice little upswing here, and unbalanced volume also looks good. Stops on this one, probably give it a little bit of rope. 48 cents. Would be looking to add to positions on dips under 50 cents if they occur. Again, right now in this market, half positions as we tiptoe into some of these plays. There's going to be lots of plays in the near term, so we're sort of dipping our toes in because we could see some bouncing back and forth in the market as traders, kind of decide what they're going to do in the near term. We do have a crap load of bears out there, which is fantastic. The spike in gold prices over the last couple of days has really brought the nut jobs out of the woodwork, which is great. The more of those clowns we see posting on message boards and in chat rooms, the better the market looks, in my opinion. So that's pretty much it for the video. I will see you guys in the chat room tomorrow. Good night.